Welcome to Friday's market wrap-up here at Wealth Creation Investing. Matthew Buckley, the Chief Investment Strategist at WCI, and obviously an incredibly volatile week, folks. Triple-digit up, triple-digit down, as the market's really trying to find its way. Now, obviously the beginning of the week saw continued selling from last week's Fed announcement, and then we had a couple days of rip-your-face-off rallies where the market, in my opinion, basically after standing there and rubbing its face after getting smacked last week from Bernanke, more or less turned around and said, you know what, we don't think you're going anywhere anytime soon, and put the rally hats back on and continued to go higher. I don't think that's the right tack to take, even though Bernanke sent a pretty clear message last week. He shot a big missile across our bow, the market's bow, and said, this thing's going to end. You know, he really shot his shotgun into the air in the bar and said, listen, everybody on hopium, this is going to end. And after the market freaked out this week, he sent a couple of his Fed governors out there to walk back some of what he said, you know, and kind of take the sting out of it. Well, the market doesn't like confusion, okay? The market doesn't like being told, you know, being smacked in the face and then being apologized to. You know, it's like an abused person. You know, they get hit, then they get hugged. The market's not going to enjoy that, and we're going to see volatility, as I've predicted, throughout the summer. We're going to channel sideways here. So for everybody who got long this week on these relief rallies, is hurting today. Evidenced by, look at this, Chicago PMI. Came in a huge miss out of the Chicago PMI. A little bit of a beat with University of Michigan consumer sentiment, but not enough to really make the market calm down here. As you can see, this is why we have hedges in our portfolio. This bullish double vertical on SDS, Sierra Delta Sierra, which, if you're not familiar, is the ProShares ultra short S&P 500. So as the market goes down, this trade goes up. So for the past couple days, this trade's been a blinding red in my portfolio. Today, it's a blinding green. Make sure you are not swimming around this market naked. The tide's going to go out again, folks, between now and when the Fed really says, hey, we're not kidding, you know, we're dialing it back from $85 billion a month to $65 billion a month, and then the market really freaks the hell out. Make sure you are hedged and you can sleep better at night. I would not be getting long in this market. I would not be going uber short, because I really do think the market drunks can throw a temper tantrum and implode, and the Fed come out and say, hey, just kidding, we're going to be here forever. So very interesting times. As an options trader, I absolutely love it. I love the volatility. I love the back and forth. You know, trading options when a market going straight up or straight down is a little bit boring, because there's no volatility. The market knows where it's going. However, now, as we see these triple-digit down days, followed by triple-digit up days, followed by triple-digit down days, target-rich environment trading options, especially, you know, with the VIX all over the place. VIX was imploding the other day. Now it's back up above 17. We've been doing bearish and bullish double verticals on the VIX for the past couple weeks, just because it's like shooting fish in a barrel. Market's going to freak out, then it's not going to freak out. Market's going to freak out. This is a heart rate monitor, and these are some pretty cool trades to place on here. Bullish double verticals and bearish double verticals on volatility. If you're interested in figuring out how we do that, you can head over to topgunoptions.com, and we have a bunch of different services. But if you're just getting used to Top Gun, or want to take a look at what we do, go to topgunoptions.com/TA-LTB. That stands for Trade Alert Live Trade Brief. Okay, and we have skill-based trade alerts and live trade briefing services where we trade live in the market for a couple hours, and also send out, you know, via email and text alerts with new trades and updates to existing positions, because this is not a market to be trading solo, because we have yet to see how crazy it's going to be this summer. We're getting into Q2 earnings season. BlackBerry already came out with a swing and a miss. I don't think earnings are going to be good and could potentially pull this market down, or at least make it choppy for the summer. So I'm having a great time. If you're not, I think you're doing it wrong, and you could probably doing better. Join up with a professional wingman here at Top Gun Options. Okay, happy hunting. Make sure you hedge. Have a great weekend, and I'll see you for Monday's market outlook. We'll see you.